Everyone, this is Rohit from Lifestyle Mastery. Today I'm excited to have Evgenia Plotnikova, who's a general partner at Dawn. Evgenia leads on investing in exceptional SaaS companies from early stage to pre-IPO. She's particularly passionate about data, automation, and cloud infrastructure. Her investments include BRYTER, Dataiku, and Harbr and Soldo. Prior to Dawn, Evgenia spent multiple years in venture and private equity, including at Atomico, a pan-European VC and TPG, San Francisco private equity giant. Evgenia is a science pro and Wharton graduate. And a big thank you to Rafael Greco from Runaway Series podcast for the introduction. Welcome to the show, Evgenia.
Thank you so much for having me, Rohit. Excited to speak to you today.
Yeah, no, also, big congratulations. You've been recently as a general partner at Dawn Capital. How did the entire journey, start? How did you get into this crazy world of venture capital?
No, absolutely. I have to say, I did not set out as a child dreaming of being a venture capitalist. I would say that it was a series of career choices that led me here, and I couldn't be happier. I was born in a very small city in the south of Russia. Neither of my parents have a university degree. I didn't even dream of working in finance, and through sort of my life, it just so happened that I ended up moving to France and the US, spent multiple years there. I originally started political science and I wanted to be a diplomat and I wanted to change things in the world. And I think I very quickly realized that politics was a thorny area and change was difficult to affect. And so that led me to career in finance, where I felt the results of my work were a lot more concrete and the impact had a more immediate reaction, if you'd like. Now, my journey into investing started within the world of private equity. I have to say that when I started investing in Europe, venture capital as an asset class wasn't necessarily as well known yet. I think we have seen significant acceleration of and a lot of exciting startups and second-time entrepreneurs here in Europe. But at the time, it wasn't obvious, and so private equity at the time felt like the golden route of investing. I was delighted to spend time at TPG. That was a wonderful school. But in a way, I quickly realized that investing in the future was a lot more exciting than buying some of the businesses of the past. A lot of my companies were being disrupted. A lot of them needed technology desperately to innovate and evolve. And so I figured I'm going to ride a wave that's hopefully bigger than mine and join the world of venture. Now it started at Atomico, and then I've been here with Dawn for the past few years, focusing specifically on software. And I'm delighted to be on the earlier stage side. It's been a fun ride.
Yeah, no, super interesting because you've been part of Atomico and TPG Capital, both in the private equity and venture capital. What were some of the biggest takeaways from working in both sides of the world, and how did it help you to get into Dawn?
Sure, no, absolutely. So I think, look, with TPG, I used to invest in businesses that sometimes were very much physical businesses, consumer businesses, telco businesses, and I think it gives you a little bit of perspective of how some of those businesses that are potential software buyers that I interact with today think and operate. If you invest in a large insurance business, it gives you a little bit of a perspective what kind of budgeting tool that might be using, what credit scoring tooling that they use. So it gave me an insight into some of those sort of day-to-day operations, which was invaluable. I think in a way, the world of private equity is actually not necessarily that dissimilar to the world of venture. When you're in PE, you still spend a significant amount of time thinking about the size of the opportunity, the value chain of a specific industry, the product and the growth. It just so happens that you have other levers. Typically as a PE investor, you can use leverage to maximize your returns because you have EBITDA, unlike in a lot of early stage venture businesses, and you hope for multiple expansions over time. Now, neither of those two lateral levers exist in the world of venture, but the first one is still very very similar. So I think sort of that still gave me that 101 foundation that I could continue applying even in the earlier stage. It's just a little bit more focused on growth at that stage.
Interesting. And you've been part of Dawn Capital for a couple of years. What is the thesis for Dawn Capital, and are you sector and stage agnostic?
Sure. Actually, quite a few more years than that, actually. But you know what? It's funny with the pandemic. It feels both like a few years, but also a few decades. I feel like every day counts to 3. The focus of Dawn is very specifically B2B software, and it has been for the past 15 years since the firm started, and we've been unashamedly focused on one thing only, and I think it has given us an edge, deep networks for specifically B2B software. Now within this, we obviously touch on a lot of different verticals. We've done a lot of fintech. We've had businesses like iZettle and Tink in our portfolio. We've done a lot of security with Mimecast is in the first fund, and a few others. We do a lot in data and analytics, and that continues to accelerate. Calibra, Dataiku, Quintexa, Fireball, to just some of the few names that we've worked with. And then we're increasingly doing what people now call future work. Now we used to call work enablement, but there's a lot happening there, and we closely look at automation. Regardless of the vertical that we pick, it's always about a strong element of software and B2B focus.
All right, and what is ideally the right check size for Dawn Capital to invest into early stage companies?
Sure. So we say that our flagship funds invest in Series A and Series B. Now, to be honest with you, Rohit, I'm not even sure what those letters mean anymore. The world of venture is moving and shifting so fast these days. I'd say what that means for us is that you have found a product market fit, which means a buyer understands the problem that they have. They can select a specific vendor, and they have shown such a level of advocacy for that vendor. And then behind that, we can invest anywhere between 10 to 30 million bucks off the bat. We've made exceptions on both ends. We'd rather be part of an exciting journey than not. So we'll do everything we can to work with the most amazing entrepreneurs. And then what we also can do is we run a series of other funds alongside our main fund, which means actually over time, and that has happened numerous times, we can invest more than 100 million in any given business. So Dataiku is a great example where once we've invested, we actually continue to double down and invest. And most recently, we heavily participated in their Series E. So once we're backers of a breakout business, we'll continue there.
Correct. And how do you look at portfolio construction? You talked about fintech and SaaS, but how do you look about focusing on a sector when you're investing?
Sure, no, that's a great question. So historically and today, we try and find the right balance between backing businesses across sort of variety of areas of expertise that we know really well. So we just feel that it's sort of a bit of a family, right? So of course we only back software businesses, so you already have 40, 50 odd cousins that all gone through the same scaling pains, and we encounter the same problems that we're delighted to help with. But in addition, if you back numerous businesses around the data value chain, for example, you start seeing certain similarities, and you can actually help them partner and collaborate. That being said, I think as a fund, our number one priority is returns to our investors, LPs that we're privileged to be backed by. And so we try and not be limited, but things that we know, and constantly look out for new sectors, new pockets of interest, new areas of innovation. And then obviously we'll try and kind of, given our focus on Series A and B, we'll try and get a mix of slightly earlier stage businesses and slightly later stage businesses in the fund. But look, at the end of the day, it's just about finding the businesses that will become the software titans of tomorrow.
Yeah, no, absolutely. I think choosing industries and companies is always difficult. But how do you look at time allocation across your portfolio companies? Do you focus on those businesses which need a lot of support, or is it focusing on those businesses which you believe could be the 100x baggers going forward?
Rahid, it's like asking me who's my favorite child. That is an unfair question. all of them are favorite children. Look, I think the reality of it is we are quite an approachable, friendly fund. I think sort of funnily enough, our internal culture, I think, reflects very much the way that we interact with our entrepreneurs, where it's very much down to earth, very connected with each other. And so it's a little bit a la carte. Majority of the CEOs that I'm privileged to work with, obviously we're in Europe, so it's WhatsApp, but when they move to the US, maybe it's Telegram or Signal. We'll chat to each other quite often now. In terms of if you look at the whole year, obviously there'll be spikes where a company might need more support than usual, and typically that's related to things like fundraising, where I think it's our job and our role to help the CEOs and the founders through that quite an intensive and challenging period, or things like hiring. At every stage of the journey of a business, there's typically a candidate or profile that you probably deserve at that stage, and we consider it our job to always get you a little bit better than you deserve.
Got it. And you've also led and invested into a lot of startups. How do you look at competitor analysis while evaluating an opportunity these days?
Sure. Look, I think if there is competition, that's a great thing. That means that the problem is real, and that right. multiple teams and players have identified it as such. That doesn't necessarily scare us away. I think what's important when we assess competitors is that we'll zoom in within a specific market. We'll zoom into the value chain of that market, and we'll try and understand if the specific business that we're assessing versus the competitors is playing in the same part of the value chain or not. Are they in the thorniest, most difficult part to solve? Are they in the one where you can develop a genuine technology moat? Is it an execution play? Those questions then become important in assessing the competitive intensity of a specific sector, and whether we feel that the specific business or those specific founders are building something that's truly defensible. Now, the small asterisk to this, obviously, is that not every market is a winner takes it all market. Obviously, as investors, we would always love to be backing the number one player, but it does happen that in a given sector, you might have multiple very large outcomes, and that's also all right.
Got it. And how do you look at evaluating early stage startups when the metrics are not clear? And what metrics do you think are important for an early stage founder to show at such an early stage?
Sure. And look, the things are always evolving. I think the way that we tend to look at it at the very early stages, how much capital can the company actually take on, and what is the budget and the business looking like in the next 12 to 18 months? I think when you invest in early stage, underwriting a 5-year plan feels like sticking your finger in the air and hoping for the best. In my experience, those never work. And so I think for us, it is sort of the number one question is like, okay, so what's the budget for the 18 months? And based on the amount of money that you need to get there, what is a sensible dilution that this company should accept or take? And then obviously we'll sort of do a bit of a cross check of thinking, what this company could be valued at once they become a publicly traded business, and we'll try to triangulate that versus where they're at. Multiples analysis is common, but obviously when you come to very, very early stage, sometimes it's just not really meaningful. So we'll have to think about those first two elements I told you about.
Correct. And there've been larger funds like Tiger Global, SoftBank, and Anderson Horowitz, where the capital infusion into startups has really accelerated in the last year or so. Where do you see the future in venture funds?
And those are all friends of the firm. So like we're delighted to have worked with some of those names that you have mentioned, and delighted to share some of those boards. And look, the reality of it is that I think it has become very apparent that technology per se is not an industry. When I started in banking years ago, people used to talk about TMT as a sector, right? Technology, media, telecom. Now I think it's just so far removed from the current reality where technology penetrates every single sector that you talk about. On the SaaS side of life, we're continuing to see the fundamental shift of people adopting cloud, but also an arguably even more important shift of manual pen and paper processes being, shifting to software. That means the opportunity is only ever growing, right? How large is SaaS sector itself? Probably in trillions. That means that despite all the capital that's going into the system, it's going into an increasing amount of innovation. And so actually, I'm delighted to see that that's the case. Many years ago, it was very challenging for businesses to scale. There used to be things like term sheets tied to specific goalposts and whatnot, right? And I think today we're finally in a place where capital is going to fund very exciting businesses. And if you look at public markets, case in point of some exciting companies being created, and it's all thanks to venture backing.
Yeah, absolutely. And in the last year or so, a lot of money has been converted into tech startups. But what are your thoughts on these compressed fundraising timeline for founders?
In the timelines for the founders to fundraise, or
correct, for them to raise funds?
Well, I think it's becoming hopefully a little bit easier to raise funds. When there is more capital available. Plus, I think people got into habit now of doing a lot more virtual conferencing, whether it's Zoom or something else to fundraise. I think it does introduce an element of democratization in the ecosystem. Now, I appreciate that it's not true yet for every founder or for every startup, but I think it is progressively changing and hopefully making it more accessible. Now, it also means that you're rightly pointing out that the timelines are compressing and the fundraising periods are a lot shorter than they used to be. Now, that makes my job as a VC a hell of a lot harder, but we'll love a challenge here at Dawn. And so what that means for us is that we try and be very proactive about the sectors that we like, and we're trying, to the extent possible, make it so that when an interesting opportunity comes up and it's a quick process, we know the sector and the specific pocket of opportunity that business operates in, so that we can say with a certain degree of confidence, now that's the right product, that's the right founding team, that's a great proposition that we want to be part of. Not always easy, but we try and do our best.
Got it. And do you think because of the COVID, a lot of startups don't need to be in the larger ecosystem, but do you think SaaS business and enterprise companies can come out of larger ecosystem, can come out of smaller ecosystem and from remote settings as well?
Yeah, no, look, absolutely. So the way that we are set up today is Dawn, actually. So we typically invest in businesses that started either started in Europe or Israel or have a very significant presence. And when they're SaaS businesses, 9 times out of 10, they will become global, and US becomes a very big market opportunity for them. For some of our fintech businesses, they sometimes stay just pan-European, and that's enough. iZettle, when they got bought, and it's a $2 billion acquisition, they were just Europe and Latin America, and so you can build a big enough business here. Now, what that means is that you can be anywhere when you start that business. The reality of it is that it will become global over time. I think with COVID, that reality became even more true. If that was impossible in the first place. Now, we always believed that there is no geographic monopoly of talent. We've backed businesses in Klagenfurt in Austria, and it takes you 2 planes to get there. It takes you longer to get there than to New York from here. So we'll back outstanding businesses wherever they are across Europe. But I think invariably what we're seeing now is that with pandemic, there is more and more remote first businesses, or at least businesses that are more dispersed since day one, for sure.
Got it. And at Dawn Capital, there are a lot of female partners, as well as investors female investors in the investment committee, and there's a more diverse group of people. What advice would you give to founders who should look at building a diverse culture at the start of their journey?
Thank you so much for asking, Rahid. This is something that's truly dear to my heart. So we're very lucky to be an extremely diverse firm, and I put it to the working conditions that we've created, but also our culture. I hope that what it does is that it trickles down to more diverse companies that we work with. I think it's a function of a number of things. So when we hire individuals, we always look for the best possible person for the job. We try not to differentiate by origin or gender orientation of a specific person. What we do try and make a huge amount of effort on is that we try and make our hiring pipelines as diverse as possible, because that truly gives you choice. And we try and view everyone in that pipeline in the same exact manner, which sometimes is a challenge, but is certainly a possibility. And then once people become part of Dawn, we spend a lot of time on making sure that certain conditions are favorable for people to progress in their career. We're an incredibly meritocratic organization where actually we're support for general partners. 2 out of 4 have started as juniors in the firm, including myself, and have now progressed. So kind of having that is incredibly important. And then we have a lot of policies for, I'll speak for myself, and 1 degree of diversity, which is gender. We cover things like fertility testing. We have an incredibly generous parental leave for both men and women. We offer egg freezing and a number of other things that allows people to hopefully have a lot of different choices and make their work as easy as possible. So definitely something we care about a lot.
Got it. And what advice would you give to founders on approaching the talent market? Obviously, become remote first, but they also are competing with everyone in the market. What advice would you give to them to get the best of talent today?
The best of talent. Talent is such a thorny issue, and always is whatever stage you at. That in fact we actually created an internal talent function, and we're continuing to kind of bulk it because we realize it's such a big problem. So not a big problem, I suppose it's more of a challenge that people should be solving. So I think the number 1 advice is try and sort of think of hiring people that know better than you when you're the CEO. I think hiring is humbles you, hopefully, when you meet individuals that are true experts in sales, marketing, customer success, whatever area you're hiring for. In fact, this is probably one of the most important things we judge people on in our CEOs and founders, is the ability to bring in people that are better than them in every individual function. So it's important to remember, if you feel that the candidate knows more than you and challenges you, that's probably the right hire. I think the second one is in this remote world is perhaps realizing that all of a sudden the talent pool got bigger. There are people that are now willing to move to new places or people that are willing to work remotely. So kind of considering those options becomes also a possibility, and that wasn't necessarily true before. And also perhaps recognizing that as you grow, your business will evolve. And so it's not uncommon that the person that started with you when you were generating $1 million in run rate is not the same person when you're in 100. And so knowing that there will be an evolution and that it will involve multiple steps from A to Z, and being conscious of that is also probably a thing to remember.
All right, and I quickly want to do the top three. What's your favorite business book?
Oh, it's actually related to hiring, and I would recommend it. It's a book called Who, and we actually bought it for everyone in the office. It's called Who: The A Method for Hiring, by Jeff Smart and Randy Street. A handy guide to have in your back pocket.
All right, we'll put it in the show notes. And you know, if you could go back in time when you started your venture capital career, what is the one thing you would have focused on or done anything differently?
It's actually, I think, a piece of advice I'd give anyone, whatever their job is, whether venture capital or not. I think in the feedback culture of the corporate world of today, a lot of us focus on areas of improvement, on how we can do better. And I think it's important to know those things about yourselves, important to strive to improve. It's equally as important to actually find people around you who can fill some of those gaps that you have on a team. I think one thing that people are not necessarily as aware of is their superpowers. So appreciating and knowing what your superpower is kind of what makes you special. So I wish I could go back to myself many, many moons ago and say, hey, like, those are the 3 superpowers you have, Evgenia. Do not forget that. Obviously, work on your areas of improvement, but don't forget to continue to develop and build on those, because that's what makes you special.
No, absolutely great advice. And do you have any favorite online tools, example, Gmail, Slack, Zoom?
So I am a very happy user, Superhuman. So thank you so much for that gift. I am still on the lookout for a perfect calendar tool. I live and die by my calendar. I am obsessed with it. From color coding to a variety of other hacks I found around. It is far from perfect. So I'm waiting for someone to create a perfect calendar that works.
Got it. And what is the best way people can reach out to you and know more about Atomico Capital?
Sure. Email. I try and respond to every email I get. So there's obvious emails that sometimes a little bit harder to respond to when people haven't quite read what we invest in. So again, B2B software, Series A onwards. We invest all across Europe, but we hope our businesses become global. So yeah, email is probably the best, but I'm also on Twitter, so it's at evplot on Twitter. So happy to get in touch there too.
We'll put that in the show notes. Evgenia, thank you so much for taking our time speaking to us. I really enjoyed my conversation with you.
Thank you so much, Rahid. It was real fun. I appreciate it.